Hey everybody, Courtney Smith here with our Wall Street winners for May 16th. Let's dive right in. And here's the deep end of the pool that we're going to dive into. So I think we're going to rally. I think that we've dipped far enough. Momentum has been vicious to the downside. I think that Friday was the first day in what's going to be a short, sharp rally. It's not going to be the end of the bear market, but I'm going to cover a lot of my triple ETF bear positions that have made a lot of money, and we're going to allow this rally to occur. We could get back up to 4,300. We could get back up to 4,400, something like that, but 4,300 would be my upside objective, and then the bear market will continue lower. This is a short, sharp rally, as they like to call it in the industry, a dead cat bounce. Over here we see in the Dow Jones, and we'll explain why in a minute, but just we've gone down too far too fast. There's no reason to panic in the market. Here we can see that selling pressure is increasing, but notice we finally got some buying pressure, and that little increase in buying pressure was enough to get a very sharp rally to the upside. Here we can see that the NASDAQ actually has a 2-day rally going on. Now right here, take a look at this little green line. Last time this green line is RSI, and this line right here is 70. Last time it was here, we got a nice little rally in the market. Same thing's going to happen. It just has already started 2 days ago on Thursday, Friday for the other two major indices. Here's the big reason right here. Now this is a weekly chart, so this is a long-term chart. But notice, and we talked about this a couple of weeks ago, but notice that every time we hit this 30 point, and once again, this is RSI, but it's on the weekly chart. Look at this. I think that was a pretty good buying opportunity. This one didn't make it all the way down to 30, but it was obviously on hindsight a good buying opportunity. So we're there now. Now it could go down another week, but we're going to see a significant rally in this marketplace because the momentum is showing that the sellers are exhausted. The sellers are exhausted. So we have to build a little bit more value in the short side of the market. And then, of course, we will beat on this market like a tom-tom drum after we get that rally. Seasonality, nothing going on here. You can see we should be going lower, but I think this little rally right here is what's going to really be happening. Asset allocation coming down. It means they're selling stocks. And that's the main reason why we're seeing this big bear market in the stock market is people are rushing into the quality and into the safety of bonds. You can see it right here. But if they're staying in the stock market, they're getting into the conservative sectors like consumer staples and utilities. They're not going into those frisky, sexy, high-tech stocks. Still not. But this little hookup, once again, I'm looking for a little rally here. Maybe it's just my spidey sense. I don't know. Maybe it's because I've been trading for 50 years. I don't know. But we're going to rally over the next 2 weeks. Same thing happening here in global shares, but global shares are weaker. Notice we've broken these lows over here. Now, big sharp decline here. So this was showing that the yield curve, but we're looking at short-term interest rates to 10-year. But notice even this here, where 2s, 10s has gone back to positive slightly. But by this collapsing, this is going to make it back to a flat yield curve again. And that means a big bear market. And that means a recession. The recession is going to come next year, but we're already in the bear market. So there's the little rally in bonds. You can see the purple predictor did perk up a bit here. So that's obviously useful. Bond key factors. At first glance, this looks very bullish, but notice that we got a little hook down on everything in the last week, suggesting that bond yields are going to go down. And then you can see gold here is already collapsing. So it looks to me like we're going to see lower 10-year Treasury note yields. But everybody else is worse off than the U.S. However, I now think we're going to see a significant setback in the dollar. Won't be a long-term one, but we're going to see a retracement of this massive bull market. Once again, why? Momentum divergence. Look for a drop in the dollar. So if you're long the dollar, time to take some profits here. And that means that gold will probably rally as well. Look at, once again, look at this green line here. We're down just at the 30 level. We don't have any examples of 30 going back, because we haven't been down this low for quite some time. But when we get down to 30, usually we get a rally. With the dollar selling off, gold will be supported. Net indicators, 2 neutral, 1 still bearish, but I think that's all going to change. Crude oil is going to continue to move higher. You can see we're in a sluggish, super sluggish bull market here with higher highs, higher lows. We're going to break those highs. Purple predictors very bullish. Supply and demand situation is getting better. The Biden administration has just canceled leases in Alaska, so that's going to reduce the supply in the U.S. And supply of crude oil in the U.S. is already near 5-year lows. And the profitability for refiners is at all-time highs. So demand is going to stay very, very high. At the same time, supply is already low. I'm looking for a rally back up to these old highs, and I even think we're going to surpass those highs on this rally. And of course, that's going to spike inflation, which will cause the Fed to raise interest rates more aggressively, which will then cause a bear market in the stock market and a recession. You got the linkage? It's super cool. All right. Bitcoin, like I say, you got to be bearish. But once again, I think we're going to see a rally here. Notice the purple predictor. The smart money finally came in and started buying Bitcoin down here at these lows. I wouldn't be a buyer, because it's still a bear market, but I think we can rally back up to, let's say, 36,000, maybe a little lower than that. Let's say 35 to 37,000. It's just going to be a bear market rally. That's all it's going to be. All right, freebies, you know we love you, of course. Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody, we'll see you later.